Hey everybody, Chris here. Are we ready for a Dogecoin and crypto rally? We're going to explore that in this video. Please be sure to subscribe to my channel, hit that little notification bell so you can be notified when I go live, as well as when my new videos come out. I'm doing live streams on Monday nights and Friday nights, so please be sure to tune in. We have a lot of fun in the chat talking about Doge, cryptos, and stocks, so please be sure to tune in. So over the weekend, we had a little sideways trading like we were talking about on Friday night stream. As of last Monday, a week ago, the Doge Coach had posted a question on Twitter of what we thought the price of Dogecoin would be at the end of the week. So that was after 6 days, and I had predicted 5.9 cents, which is exactly where Dogecoin was last night at the end of the week. So that's a pretty good prediction on my part. I do all right with that. Also, we had low volume, like we were talking about last week. That low volume over the weekend just wasn't leading to any moves, as well as Bitcoin as well, trading sideways, low volume as well. But we'd also talked about what was going to happen with stocks starting to trade Monday morning. And right now, so far, stocks are up. So with stocks, particularly Tesla and other NASDAQ stocks booming, we've got cryptocurrencies booming as well. Do we really want cryptocurrencies following the NASDAQ and the stock market so closely, though? That's a question that we want to explore on the safety of cryptocurrencies versus inflation. If big inflation numbers are going up, and those big inflation numbers and interest rates are causing stocks to go down, should cryptocurrencies also be going down? Cryptocurrency is supposed to be the safe haven away from banks, but now we have so many institutions buying, particularly Bitcoin, they tend to follow that as well. So when institutions want to get out of riskier assets, when there is high inflation and high interest rates, then Bitcoin will go down, which generally leads to other cryptocurrencies also going down. So why the move this morning? Why do we have things going up? You don't know with the stock market. I think there's a lot of positive thoughts in terms of businesses, and particularly in the United States, how businesses are continuing to thrive even though we have high inflation. Things are still being made. We still have an overall okay economy despite the high inflation and interest rates. So we'll see how that continues to play out. But with Dogecoin up over 6 cents and Bitcoin flirting with 20,000 again, those are good signs for the crypto market. So let's go ahead and let's take a look at the charts and the news, and I'll show you what I'm looking at. So we'll start by looking at Dogecoin on the 2-hour chart, and here's Dogecoin, just under 6 cents, just touched over this morning a couple times, right now at 5.98 cents. Here was the last 2 days. After we had Thursday's dip, Dogecoin came down to 5.5 cents, and then rallied up over 6 cents to 6.12 cents before coming back down. So this was the sideways trading with low volume that we saw over the weekend, right at 5.9 cents. But we have this little rally happening this morning. We'll see if that continues. Bitcoin chart looks very similar. Last Thursday, the dip followed by a rally came up, almost touched 20,000, which is this orange line here, before dipping back down again sideways. Low volume, relatively flat trading before this morning going on a little bit of a run. So we'll see how that trades going forward. So will Bitcoin become more volatile as U.S. inflation hits 8.2%? That's what we're talking about, is the volatility of Bitcoin. Right now, we saw over the weekend very flat, but we see that changing as stocks start trading again. That's what we're seeing. So the impact of macroeconomic factors on crypto and Bitcoin is increasing as inflation gets stronger. Both the crypto and the traditional market are facing a raging storm. Many international bodies fear that a possible global recession will soon break out. So that's the big news in terms of what's happening in the world economy. And it'll be interesting to see how the markets respond. Will the stock markets and the crypto markets follow each other, or will crypto markets stay strong if the stocks dip down? That's what we're going to be watching as we go forward. So this article by ZY Crypto, Bitcoin holds steady despite US CPI data spooking investors. Is a crash to 12,000 in the offing. So after staying flat most of the week, Bitcoin had plunged on Thursday to 18.2, and then it did this dramatic rebound, searching as high as 19.9 on Friday, before going back to the 19,100 range right through Sunday. So that's what we just watched. Since September 21st, Bitcoin has remained trapped in this tight squeeze. And what I'm watching here, if I zoom out on the 2 hour, is we do have this descending wedge happening here. This big descending wedge that you see here in green. And that descending wedge that you see there is leading to a point of inflection, which we may see some big movement coming up. Typically when you see the big charts there coming to a point here that something big is going to happen, and this is targeting about a week out from here. So that's what this is looking at in terms of the charts. And we look at Dogecoin as well. Dogecoin has something similar on a big scale, is this descending wedge happening. Now the bottom of the wedge was from June 14th down here just below around 5 cents. But Dogecoin hasn't retouched that yet. Right now, 5.5 is the lowest we've seen for Doge since back in June. So I've got this support line at 5.5, but we'll see if there's a big dip for Dogecoin, whether it dips down that low or not. That's what we're going to be watching. But these big descending wedges you see are certainly of interest to watch and see whether we see a squeeze coming or there's going to be a big dip. So inflation and unemployment data seem to be improving in the United States, suggesting the Fed might abate its 75 basis point interest rate hike target for a lower one. But some are saying there may even be 100 basis points. So a lot can happen over the next couple weeks between where we're sitting now with the unemployment data. I still think it's fudged a little bit because the actual unemployment data in the United States is based on those actually applying for unemployment benefits. And a lot of people are just taking gig jobs, part-time jobs, not applying for unemployment. They don't want to go through all of that hassle of having to report and having to go on these interviews that you need to do in order to support your unemployment checks. So yeah, I don't think it's a real true reflection of what's going on. So there's always the challenge there. But Gareth Soloway, a chief market strategist at In the Money Stocks, believes that by no means is the market at a near bottom yet, because you still have the Fed that's aggressively hiking. So we'll see whether those hikes continue. According to him, the economy is headed for a cliff dive, potentially sending Bitcoin below 12,000. So the first support is 12 to 13,000. I think in the near term, we're going to see a little bit of a bounce and then a wave down. And I do worry we're going to go to sub 10K or 8K. So this is his opinion. Now, for Bitcoin to drop below 10,000, that would be half of its value that it has now. That would mean Doge from 6 cents would go down to 3 cents if it followed Bitcoin exactly. I don't think we're going to see 3-cent Dogecoin. There's going to be too much buying pressure on Doge, particularly if it starts dipping below 4.9 cents and going down even lower. I mean, I've got my limit order set at 4.98, but if it goes down lower and 4.5, 4.4 cents, which we haven't seen since April of 2021, that would be a big drop. In fact, thinking about it, that may have been March of 2021, the last time we saw that Dogecoin that low. So that would be huge. I don't think it's going to dip that far. However, there are some calling for these big dips, and we've seen in the past these 4-year cycles of Bitcoin. The big drop in 2014, 2018, and now we have 2022. So these 4-year cycles do tend to follow, particularly Bitcoin trading. And if I go back to the Bitcoin chart here and I zoom out on the weekly, we can look back and we can see, particularly 2018 here, 2018 trading sideways after the all-time high at the end of 2017, and then there was that dip. And that dip happened November to December of 2018. Could we be looking at a similar thing here of a sideways trading and then a further dip? And that further dip, could it come down to this 12,000 level here? Or even lower of what he was saying, to 10 or 8? That would be a huge dip for Bitcoin. Kind of think there would be way too much buying pressure for it to drop that low. But we shall see. On Dogecoin, we look at this chart. You look back at 2018, Dogecoin's relatively flat. Here was a jump in Doge's price at the end of 2017, and Doge just came right back down. So Doge's history isn't really the same as Bitcoin's, because Doge didn't really start taking off until end of January 2021. So completely different type of chart that we see on the Dogecoin chart. But again, here's that wedge that's happening here, and we should see as we get closer to this inflection point that's coming in the next week or so. So overall, going forward, particularly with Dogecoin, Doge can go on big runs, and we've seen Doge do that before. We know we've got this Elon Musk Twitter thing coming up. October 28th is supposed to be the deadline date. So we're all watching that very keenly. There still could be dips going forward, though, and so always have to watch for those good buying opportunities. A lot of you are dollar cost averaging, which 5-6 cent Dogecoin is generally pretty good. Again, not financial advice, but that's what a lot of people are doing. And they think in the long run, this 5-cent Dogecoin is looking pretty good. Let me know what you think in the comments below. Are we ready for a run here, or are things going to slow down and we're going to see more dips? Give the video a like. If you haven't already, please subscribe to my channel. I appreciate the support. We'll see you next time.